The real estate collapse. I think we're about to be live now. What's up, gang? Ability. Hey guys, today I got exciting information for you guys. What's happening around the market? I got some facts. I've done some research for you, and I'm going to be breaking it down. Just a few seconds, and we're going to go. All right, guys, let's go ahead and get started. Got a lot of great information for you. Thanks for joining in. And today we're going to be talking about the real estate collapse, the market collapse, and how that is big profit, and then bringing it down to subject to investing. Now, I am bringing you information since I'm a real estate investor in the sector of homes. For example, if you read the news, they talk about how KB Home has a earning profit share of 22%. Okay, all right. Or if you read the headlines, they'll say LGI Homes will have a ROE, which is return of equity, of 20%. And for anyone, you're thinking, man, wow, that's some great numbers, man, right? But they're not going to tell it to you in one article. You would have to read multiple articles. And if you read multiple articles, you may get the facts. For example, the LGI Homes, their ticker is LGI. Oh, I'm sorry, LGIH. So these guys, in the last 5 years, their debt to income ratio, debt to equity ratio has gone from 86%. So the company's indebted 86%, okay, to 96%. So in the last 5 years, instead of being at the top of the market, just kind of like the economic people say, the news say, president says, well, we're the best economy ever. Well, they're lying to you, because one of the top builders in America, in the last 5 years, instead of being a very profitable company, what they've done is increase their debt. They don't own their business 50%. They're indebted 86%. And since 86% in the last 5 years, it's came up to 96% debt to equity ratio. So it has risen. Now, what most people don't realize is the executive VP and the general counsel, which is a guy named Brian Warman. I'm probably butchering his name. He just sold, okay, his stocks in the LGI Homes at a tune of $594 million, okay, which made the stock for that corporation drop by almost 11%. Okay, so think about that. He's the top dog in this place, but if you read the articles, it'll say, hey, the debt, the ROI, or the RE, the ROE is 20%, and you're thinking, man, this is great information, I'm going to invest into them. But the truth of the fact is the company's getting more and more debt, and the top insiders, okay, are selling, cashing out, and letting the average person hold the bag, the shit coin, if you want to call it, because they know it's not worth anything, and they know this is a time to exit. This is the highest it's going to get, and they want to exit, maybe it'll go up a little bit more, but they want to exit and cash out $500 million, if you think about it. Where the average pension, the average person investing in their 401, if they're thinking they have a solid company because they'll read the articles and they'll say good things about it. But on the flip side, if you do more research, you'll realize the insiders are selling. The company's debt have gone from 86% to 96%. So think about this, guys. This is a company that's a Fortune 500 company on NASDAQ. People all over the world are investing into it, especially with the world recession that we're having. People from Japan, from China, for everywhere you could imagine, Russia, are coming to America and investing in these businesses. And for a corporation to be so big and so successful, how can it have a debt to equity of 96%? So that means, you know, they're indebted up to their eyeballs. There's only this much they have supposedly equity, which is no equity at all. Okay. And but people are buying their stocks and their stocks are going up like never before. Okay. So that's one corporation, a home builder. Now I always keep my eyes on these guys. Now let's talk about KB Homes. Okay. All right. So KB Homes, their dividends or their shares when they pay out has fallen by 22% in the last 5 years, guys. Okay. Um, Dividend earnings, and the reason they're giving less and less money to their holders is because business is not profitable. Okay. They're in massive amount of debt. However, if you listen to the NBC, if you listen to the news, you listen to the media, they're telling you how great it is and this is the best economy ever. But it doesn't make sense. If we're growing so much, why are home builders at least belling ship? They don't even believe in their company, they're belling ship. Why are they getting into more and more debt? I mean, if this is the prosperity of prosperity, why are more why are these home builders getting into debt versus paying off their debt, right? And it talked about how the more debt they borrow, that it makes their, for example, return of equity (ROE). It's not ROI, it's ROE to look better. That's why the more debt they borrow, they can say, "Look, we're getting a better return," but the reality is we're sinking and sinking, about to be bust. Okay, guys, if you have any questions, comment, leave it below. Um, Before I forget, guys, if you're interested in working together in my profit sharing coaching, you might want to check out my website, and we'll work together and we'll split the profits. The other thing is, right now I'm having a flash sale at my real estate dojo. I'm having my VA course for just $99, guys. It's a $1,500 course for $99. You get 25 years of experience. So go check that out. So as I just talked about the real estate sector, we can see that home builders are in trouble, but in the front, everything looking good. In the back, the elites of the corporations are exiting. Now, talking about the stock market crash and how this is going to be all profitable, the real estate crash, the stock market crash, how is that going to be profitable? Okay. And I'll get to the profitability in a second. But the market crash, well, you have so many people from not only in America, not only pensions, not only all these hedge funds, people around the world are investing into America because in their own countries they're already starting to feel the recession, boom, hitting them in their face. Okay, people in Germany, people in England, people in so many people. Okay, and as you can see, as people enter, the elites leave. All right, the people at the top, and which is going to cause massive pain and suffering for a lot of people as well. So when you add those things together, when you add, home builders um, going down, which is going to cause them to dump their properties at a deep discount while home sellers are trying to sell their home too, but they can't now because there's so much more inventory and they're competing with home builders, especially in new properties, areas that are new. That's why those areas, what I love to do, what I call subject to heaven, those are the areas where there's new homes, builders are still competing with homeowners, and with the market meltdown, a lot of home sellers are going to be motivated too because they're going to see evaporation of their equities. They're going to see evaporation of their equities in their homes and their savings, um, and which creates a big opportunity called subject to heaven. Okay. Now, what is a subject to heaven? Subject to heaven is a term that I use where there's going to be so many motivated sellers out there that they're not going to have options to sell traditionally. What is traditionally? Traditionally is like I'll hire a real estate agent, I'll get my asking price or close to my asking price, and the buyer will pay for the closing, or will get a traditional loan and pay off my mortgage. A subject to heaven is where a seller, because of these crazy conditions that the central bankers have created and the Fed has created for us, the sellers are going to be in a motivated situation, unfortunately, because they have, they're leveraged, just like KB Homes or just like LGI Homes. They're going to be over leveraged and they have to liquidate. Okay. And so the situation is going to be, they're going to be highly motivated, the homeowners, and they're going to try to sell traditionally, and it's not going to work because people are going to have homes that are upside down. Why are they going to be upside down? Well, they bought at the top of the market. Now the market is crashed, so that there's not going to be equity in their property, and a lot of them are not going to have 10, 20, 30, 40, 50, 100,000, depends what size the home they bought, to bring in at their own pocket to even it out because their homes are underwater. So there's going to be a lot of loan modifications. There's going to be short sales going on. So you have those type of inventories, and then you have these home builders that are going to be highly motivated, and they'll have sections that are like almost finished, and they'll start slashing those homes just to make the minimum payments. Because again, for example, LGI have the debt to income, or I'm sorry, debt to equity of 96% in the last right now. Before it was 86%. So they've eaten their equity, and so they got to make the payments, the minimum payments. They're indebted, or they're going to have to close down. Okay, so when you think about all that, you can see why there's going to be so much inventory out there, and a lot of the traditional way of selling is not going to work. Okay, why is it not going to work? There's too many inventory. Banks are going to be contracting. They're not going to be lending. Investors, the fix and flippers, have already got burned, or they bought homes with hard money lender and they got stuck now. And so there's not going to be that much movement out there. But some investors that understand how to create a win-win situation for themselves and for the homeowner can create great opportunities, what I call great profits, cash flow. Why? Because even if, for example, for me, if a house has negative equity, let's say the house is worth 100, the guy bought it last year, or he bought it 4 years ago, and now the market comes down and the house is now worth 80. That's perfect. Okay, not in a sense that I'm buying equity, because at that time I wouldn't be buying equity, but what I would be buying would be cash flow, where I don't have to get a loan from the bank. The seller already has an existing loan in place of 2% or 3%, basically all time low in the history of America and Babylon, all the way back to the history of mankind, guys, and Samaritans. Okay, so in a situation where the seller has marginal equity or no equity, it's a beautiful home, I could easily rent it out. Then I wouldn't be buying equity in that situation. I would be buying cash flow because it's ultra low interest rate. So there's going to be what I call subject to heaven, because there's so many builders. There's people doing lawn modification. There are going to be people doing short sales, and the builder's going to be very, very motivated to sell at a discount. They're going to give 10-year warranties. They're going to give you the brand new carpet and paint, where the homeowner next door that bought 3 years ago from them or 2 years ago from them are going to be stuck. They're not going to be able to compete with that. If you got to have any questions, leave a comment. So, guys, now we talked about the real estate crash. About I brought two different builders that right now you can buy their stocks, but they're in big trouble, and the insiders are selling their stocks. Now, I brought it into the subject to investing and how this is going to be the subject to heaven because there's going to be so many motivated sellers out there. Now, the key is how do you find these motivated sellers? What paperwork do you use? What do you tell them, right? And the information is, all out there on the internet, so you can do research because we can get into it all here. But if you need someone to hold your hand and help you find these sellers, help you talk to them, help you negotiate these deals, then you may consider joining my academy. It's just $97 for monthly coaching plus um, access to my best-selling courses. Or if you need one-on-one, then you might consider joining my profit sharing. It's $3,000, 3K for 1 month of coaching. And you'd like to continue after that, it's just $119 per month. But you don't have to continue after. But if you want more coaching, then I basically give it to you for free for just $119 a month. So um, if if you have never bought a product from me, and I highly recommend going to my website and downloading my VA course. Right now, you can get it for just $97. I sell it for $1,500. It's a full day course. I teach you how to find motivated virtual assistants that are willing to work for you for less than a dollar. The actual number is 79 cents an hour. Okay, that equates to $120 a month. They can do cold calling for you. They can do your websites. They can help you dig. They can do all these hard work that you don't want to do. Okay, have a VA do it for less than your cable bill, less than a dinner for two guys. And you can get this course right now at my real estate dojo. What do you get? Well, you get the ads, you get where to go find these people, you get the job task because having a job task that you know exactly what to have them because it sucks to hire someone and then you don't know what to have them do and now you're spending all this time. Well, you just follow my instructions. I have the job task. Okay. I have the manuals. I have the contracts. I have how to pay them, how to give them bonuses, when to pay them, how to monitor them, the softwares, all that stuff, guys. It's a full day course. Right now, I can get it for $99 on my website. I think I only have two or three left. I'm not sure. So don't wait around, guys. Thanks for watching. Click the like button, and I'll see you later, guys.